Hello and welcome to this very special Diwali edition on Moneycontrol. I'm Mahalakshmi, and today I have with me Ashvin Shetty from Marcellus Investment Managers, and Ashvin is going to give us a Diwali gift again in the form of a stock pick. So shoot, Ashvin. First of all, I know you're going to pick up a stock from the Little Champs portfolio. So what is the philosophy behind the Little Champs portfolio? How do you really go about picking stocks for that portfolio? And then, of course, your stock pick.
Sure. So first of all, Mahalakshmi, thanks for having me. Thanks for having me here, and season's greetings to everybody in advance. So coming to the Little Champs portfolio, yeah, the portfolio is now around 3 years old. We launched it on 29th August 2019. Essentially the philosophy of the product is we're looking for three things in any stock to make it to the portfolio. The first is the company should be clean from a governance perspective. So there is no negotiation whatsoever involved in that aspect. We are very stringent on the governance aspect, accounting aspect. Second is we prefer market leaders and particularly franchises which are dominant in their sector. And thirdly, we are looking for prudent capital allocators where the core business may be throwing a lot of cash, and how is the management utilizing that cash to further the market share in the core business or getting into product adjacencies. So we are essentially looking for these three aspects in the Little Champs portfolio. So if you look, the universe for Little Champs is companies below BSE 500. So there may be roughly 1,000 companies in that universe. Obviously, it's a very big list. We can't research each and every company.
Yeah.
So what we do is that we have a couple of quantitative frameworks which help us shortlist this universe to a considerably narrow subset. So the first quant screen which we apply is the forensic accounting screen. Going with the philosophy first point which I mentioned. Here we use the Marcellus proprietary forensic framework consisting of 12 accounting ratios. We use the last 6 years of financials of these companies, rank these companies on these ratios, and we eliminate the bottom 40-50% companies. Then on the remainder 40-50% companies, we apply the capital allocation filter, which is essentially we're looking how these companies are faring on the revenue growth, on the operating margin, on the working capital days, on the ROC, on the fixed assets turnover, and we select companies which crosses threshold on each of these parameters. And out of these 50% companies which had remained after the forensic screen, 40% of the companies get eliminated. So we are left with only about typically 10% of the companies, which then forms the universe for our bottom-up research. So here our analysts do a deep dive research into the companies, reading annual reports for as long as 20-25 years of the companies, and doing a lot of extensive channel checks on the company, speaking to the management, speaking to the competitors, vendors, people in the ecosystem. And then basis our qualitative frameworks, we rank these companies, and the best 15-16 companies make it to the portfolio. So we started with 1,000 companies, and only 15-16 companies make it to the portfolio.
Right. And out of that, now you're going to pick one for us for this year.
Yeah. So our pick is Voltech Packaging. So before I delve deeper into Voltech Packaging, just a disclaimer, as Mahalakshmi said, it forms part of our Little Champs portfolio. And I'm personally invested in the Little Champs portfolio, and hence I am a shareholder in Voltech Packaging. So why Voltech Packaging is, in one sentence, it's one of the, meets both the criteria. It has one of the strongest moat in its industry. Secondly, from a growth perspective also, we are pretty confident about the growth runway for the company for the next 3 to 5 years. Just a brief background about Voltech Packaging. The company was set up in 1986 by Mr. Lakshmana Rao and Mr. Subramaniam. And over the years, it has diversified into many segments like paints, lubricants, and food and other products. So why we like Voltech Packaging, the competitive advantage around three pillars. One is the product innovation. So Voltech has entered every segment with a product differentiation. For example, when it entered the paint industry in 90s, the prevalent packaging method was tin packaging. Voltech was the first to introduce plastic pail at that point in time, and it really kind of revolutionized the packaging of the paint. Similarly, when it entered lubricants, there was a prevalent problem of tampering of the products. So Voltech came up with a very innovative solution called pull-out spout, where actually you can figure out whether the container is being tampered. And lastly, around 11, 12 years back, it entered the food and FMCG space through an IML technology, which is in-mold labeling, where actually the labeling is not applied after the container is made, where the labeling actually is infused at the time of the making of the container itself. So it's a pretty advanced technology, involves a lot of robotics, a lot of automation, and Voltech was the first company, kind of at least the pioneer in India to bring in that technology. So we like this culture of innovation culture. It is not that a Moltech kind of enters and copies the product of copies others' product. Always comes with a differentiated product. So that is one pillar, innovation we like. Second is that what differentiates Moltech compared to its peer is the backward integration. So it is also one, or rather a very few companies which are backward integrated into molds. So molds are very important element for making the containers. So a lot of molds are manufactured in-house by the Moltech team. The background of this is that before the Moltech promoters ventured into packaging, they were actually essentially tool room guys actually. So they have a history of making molds. So there is an in-house expertise over there. And what advantage having an in-house mold gives to Moltech is it helps faster product development cycle. Because you can design the mold in-house, you can do it pretty fast. So it helps you come up with newer products. Secondly, because you are developing the mold in-house, you are maintaining yourself, the longevity of the mold also increases. So as a result, over a life cycle, they are able to generate much more from in-house mold than a bought-out mold. And secondly, the paint industry, or for that matter, largely all the FMCG industry operates on a just-in-time inventory. So they don't keep inventories of packaging products, containers at their factories. Rather, they want vendors to supply them as soon as possible. So having an in-house mold also helps whenever there is a breakdown, because they know this how to make the mold, repair it.
Right.
So that also helps them put things back on the track very faster compared to the peers. So all of these forms are very formidable competitive advantages. And third pillar is that there is a lot of customer stickiness also. So as I said, like there is a dependency of the customers on getting just-in-time inventory from vendors. So there is element of customer stickiness over there. Secondly, the dimensions of the packaging. The large part of paint industry, lubricant industry, the filling of the paint is largely automated, and hence the dimension of the product or the packaging container has to be very accurate. So even if there is some mismatch, there is some change in the dimension, it can impact your filling process. So hence consistency of the quality plays a very important role. So here also backward integrating capability of Moltech places its advantage over the peers. And lastly, particularly the in-mold labeling, backward integration has even more role to play, because here not only there is involvement of mold, but there is, as I said, like there is a lot of robotics also involved. The label actually is placed by the robots inside the mold, etc. And here also, Moltech has gone on to make in-house robots, in-house labels for IML. So as a result, we think Moltech, in terms of making IML in-mold labeling for bigger containers, more than 10 liter, 15 liter containers, Moltech is only Indian companies which have been able to achieve this feat. So very strong competitive advantage around the company. And secondly, we are also confident about the growth runway for the next 3 to 5 years for the company. Coming from one is that within the existing segments of plain lubricants, IML, there's a lot of penetration opportunity for the company, particularly in the food and FMCG space. I think IML adoption is still at a nascent stage, but as the awareness surrounding hygiene, and IML also gives a very good finish, so it also indirectly helps advertising and branding the product. So as this awareness of the customer increases, I think IML penetration itself can give a good growth runway to Moltech. Secondly, Moltech historically has been having plants in South India and West India. For the first time, they are putting up now plant in North India. So that can help it penetrate customers in the northern part of the country. And thirdly, they are also entering a new segment called injection blow molding, where they are targeting pharma and OTC customers. So here the uniqueness is that the blow molding is typically it is combining the advantage of both injection molding as well as blow molding. So for the neck part of the container, which is the most critical part, Voltech will do the injection molding, whereas for the body, it will do the blow molding. So it will combine the advantages of both these technologies. So in a nutshell, that is our investment thesis for Voltech Packaging.
Sure. So tell me, first of all, the valuation of the company. How much growth do you expect over the next 1 to 3 years, and what is the multiple it is trading at?
Yeah. So if you look at the historical growth rate of the company, whether we talk about last 3 years, 5 years, 10 years, it's been very consistent around that 20% mark. So if you look at the operating profit growth, so revenue growth may be a little bit misleading because there is an element of pass-through of the raw material increase or decrease. So
Right.
judging the company or revenue growth may be a little bit misleading. So operating profit growth is a good metric. So it's as consistent as it gets around the 20% mark.
Okay.
And very surprisingly, even the challenges that we saw in the last 2 to 3 years because of COVID, the company, in fact, has seen an acceleration in the growth in the last 3 years. And very credibly, this growth is also accompanied by that ROC, return on capital employed. They have been able to maintain that 20%. So there has been no dilution in the return on capital employed. And we'll think that largely this both ROC as well as growth should continue going forward. In fact, it can also accelerate. As I said, like there are a couple of new initiatives. One is the plants coming in northern India, which opens the door for the company to cater to large clients like Berger Paints, Kansai Paints, even the
Right.
Asian Paints North plant. And secondly, the IBM. So we think that that growth trajectory should continue. In fact, it should somewhat accelerate. So company's current market cap is close to 2,800 crores. If you see last year, they generated PAT of close to 65 crores. So the company is trading at 40 times on a trailing FY22 multiple.
Right.
But if the company is able to maintain this growth rate and return on capital employed, we don't see any reason why this multiple should kind of derate.
Fair enough. Fair enough. So now I have a few questions. First of all, the competitive landscape. This obviously the way you described. I mean, they have developed the entire range that goes into their solutions, like including motors and invested in robotics and stuff like that. What is the competitive? Who is their nearest competitor? I mean, is there any competition in that space at all? That is number one. Second is if you just look at the industry structure. Typically the problem with packaging is that on one end the customers are all large players, so they will invariably extract the last penny out of you, and on the other side it is resin, because that is the largest component of your product. So there also you don't have any control over the pricing. So because of this competitive position, I mean, how does it really play out in terms of pricing power for themselves? Is cost really resin costs are just a pass through, so they're able to sustain margins with even if in an inflationary environment like this year?
Yeah, I think that's a very great question. So coming to the specific competitors, so there are different competitors in different segments. For example, in the paint containers, there is a listed company called Hightech. Then there is Seaward. There is Sai Baba Container based in South India. Similarly, in the food and FMCG space, there is Jolly Containers, there is Cap Cones, etc. So different competitors in different segments. Voltech is kind of has presence across all these segments. But your question surrounding how does Voltech survive between these two giants, the customers, big customers like Asian Paints on one hand, and big suppliers like Reliance on the other hand. I think if you look at the industry ROC and margin, it is around that 10 to 12% mark. So if you look at the median of the competitors, I say that is around 10 to 12% mark. Why Voltech is able to take that 12% to 18 to 20% is largely because of the operating efficiency. So it is not that they have any special pricing power. Obviously, in some products like IML, there is a pricing power because the competition is relatively less. But for large part of the packaging that is supplied to paint industry, lubricant industry, it's a largely commodity products. So where Voltech is able to generate that extra margins, extra return on capital employed is through the operating efficiencies. Again, boils down to that main reason for that is the backward integration that they have. So having in-house mold actually kind of saves you a lot of cost. And secondly, the automation which I mentioned about, that also leads to a significant savings in the employee cost. So I think that kind of explains the difference between the Voltech and the general packaging industry margins and return on capital.
Right. And how do you see this going forward? Because again, I go back to the packaging industry because that is the only reference point that we have. And one of the problems with most packaging companies in India is also, however innovative you are, the next competitor is always going to be able to copy you. There is nothing
Yeah.
that we have come across in packaging so far where the innovator has been left a long runway to lead with the innovation and somebody is not trailing them. And push comes to a shove, again the customers, either they will do reverse bidding or they'll do something to ensure that they drop the prices down. So do you really see this company as being able to defend margins in future too? And how far behind is the next competitor? Because you named four or five, I'm sure they're not as much in scale, and they obviously have inefficiencies also. But they can always spoil the market for you.
Yeah. Again, that's a very good question. So one thing again, in fact, we like about Moltech is that it doesn't, as I said, like doesn't copy the product. It comes with a differentiated product, which addresses the customer problems. So long that you are able to do that and consistently, I think there will be no problems which you mentioned. For example, in 90s, as I said, like the prevalent method of packaging in the paint industry, lubricant industry was tin packaging. So Moltech came out with this plastic pail. So they innovated, they earned that money, and you're right that 4 or 5 years may it gets copied. So what next thing they did was basically come up with full spot technology. It's a one layer more than the having a simple plastic pail. Then the 2011 or 2010 foray into the IML technology. Again, it kind of nobody had attempted it, at least at that scale in the Indian packaging industry. So Moltech came up with these innovative solutions, where there is very low human involvement. And recently again coming up with injection blow molding technology. So the management has been very agile. They recognize that whatever innovation you do, eventually it will get copied away. So the success, the secret recipe is basically always think ahead. Of 4 or 5 years, what do you want to do? And that is where Moltech management has been very very agile, very very proactive in doing that, and that is what also differentiates Moltech versus the peers. Thinking always maintaining that gap versus the peers. Always thinking 5-10 years ahead of the what the industry is doing.
Okay. So one last question, and this I think is really the mother of all questions with respect to packaging. With respect to sustainability, because one is, what is your view on how the rigids industry itself will go? Because plastics is, the regulatory environment and the company narratives against plastics itself is going in one direction. But let us assume that that is still some time away because you've not really found out any replacements or viable solutions around that. The more important thing is recyclability, and I'm told that with in mold packaging, that is an issue because you're not able to pull out the inks from the plastic. And now a lot of companies, for example cola, they're moving out of those green bottles because it's not recyclable. So if that trend gathers ground, you lose a segment which is which is very viable, which is where you have built your innovation around, and that's a segment and that's growing, and that is where your edge really is. So how do you see threat around this recyclability of IML? Is that a big threat? Do you see that panning out?
Obviously, it's a very valid question, and we also done kind of one of the things that we researched before investing in Voltech was around this whole sustainability. So there are 2-3 things which are the mitigating factors over here. So one is that what are the alternatives to plastic? So whether we talk about metal, there is a carbon footprint involved. Whether we talk about paper, there is a environmental impact, deforestation, etc. So really, the alternatives have not come up. Having
Correct,
said that,
correct.
the concern that currently around plastic is having microns, beyond less than a particular threshold. Whereas Moltech, when you look, Moltech containers, they are into 400, 500 microns, where it increases the scope for recyclability. It also makes economic sense because when you are, say, making 50 microns, technically it can be recycled, but because the scrap is based on the weight of the product, less than 50 microns, it doesn't make economic sense, and hence recyclability is very low. But when you're talking about 400, 500 micron containers, the weight is there, you can generate very good scrap value, etc. So that also makes it economically viable. And thirdly, regarding IML, actually the labeling, good thing about IML is that the label of label in IML is also made of the same material as the container. So polypropylene is the product, raw material which is used. In fact, why the IML label fuses to the container is because it is the same material. So both the label as well as the container is made of the same polypropylene granules. And hence, in fact, the recyclability is all the better in case of IML, because the label as well as the container is of the same product.
That is what the company claims, but I understand from other industry people that that the inks is the problem. It's not the labels versus the rigid. It is the inks that pollutes the thing and makes it recyclable. And that is why I think these cola companies are also now moving to those transparent bottles with labels around them rather than the green containers. So I don't know how that is going to emerge, but do you count that as a threat? Does it alter your calculations? Is that part of the narrative?
So far, we don't see as a threat, but that is something we can't take our pedal off. Constantly, we need to find out, interact with industry, see what is happening in the trend. But as of now, our understanding is that purely from a Voltech, I'm not commenting on the broader plastic packaging industry.
Right.
Purely from a Voltech perspective, given the weight of the containers, the microns involved, and secondly because of the homogeneity, the label and container, it is quite secured at this moment.
Correct. Thank you so much, Ashwin. That's all the questions from me. This is a great idea, and I hope the viewers have understood this correctly. Anything else that you perceive as a threat for this company, or why what is the downside that you expect?
No, I think it looks quite, even from I see from the end user industry, paints, obviously lubricant is a structurally slow going industry, but the bigger segment for Voltech paint, again, we see there is room for penetration, there is growth runway. Secondly, the management is agile. That itself actually gives us a lot of relief that they are thinking ahead of the peers. They are thinking what will happen next in the industry, come up with the new products. They enter new segments every 4 to 5 years. That is a great sight of relief. So nothing as such, obviously, but we keep our eyes and ears open. We do our channel checks. We try to be on the top of the things over here.
Right. Thank you so much, Ashwin. It was a pleasure talking to you.
Same here. Thank you. And wish you a very happy Diwali once again. Thank you.
Thank you. Same to you.